All right, today we are going to break down a tactical guide to momentum trading. We're going to reverse engineer the exact strategies that some of the most consistent players in the game use. Look, this isn't about getting lucky. It's about precision. It's about timing, and it's about hunting for a very, very specific type of stock.
So how does a day like this even happen? Let me tell you, a result this massive is no accident. It is the outcome of a very specific system. We're going to pull back the curtain and show you the exact playbook that makes a day like this possible.
But first things first, let's be super clear about what this is not. We are not talking about long-term buy and hold investing, trying to find the next Amazon. No way. This strategy is all about pure raw speed. It focuses only on the most volatile stocks on any given day, that tiny slice of the market, the top 5%, where these extreme price swings happen.
Okay, so where do you even start looking for these things? It all begins with the very first phase of the playbook, the hunt. This is all about filtering through literally thousands of stocks just to find the one or two that have the absolute perfect setup. The real secret sauce here is just how picky this strategy is. I want you to think of it like a giant funnel. It's designed to completely ignore 95% of the market because, honestly, for what we're doing, those stocks are just noise. We are hunting for one thing and one thing only, a massive, undeniable imbalance between supply and demand. So for a stock to even get on our radar, it has to pass 5 non-negotiable checks. It's got to be a top gainer, proving it already has crazy momentum. It needs a real news catalyst, something that's getting a lot of eyeballs on it. The price has to be in that sweet spot, and it needs to be trading with huge relative volume, showing there's intense interest. And, this is absolutely key, it has to have a low float, which just means the supply of shares out there is tiny.
When all 5 of those pillars line up just right, you get the perfect storm for what traders call a squeeze. And really, it's just simple economics, but on steroids. You have this tidal wave of demand, right, fueled by massive volume, and it's all chasing this tiny, limited supply of shares. Well, the price has nowhere to go but up. It's literally forced to explode higher just to find anyone willing to sell. Okay, so we found our stock. It's passed the test. Now for phase 2, the signal. This part is purely about timing. How do you pinpoint the exact moment to get in? Well, for that, we use a really simple red light/green light system. And that system is built around a technical indicator called the MACD. Now, don't worry about the long name, moving average convergence divergence. All you really need to know is that it tracks momentum. And when that fast line crosses above the slow line, it's a huge sign that momentum isn't just there, it's building, and it's building fast. Let's break this down with that simple red light/green light idea. When you see the lines spreading apart, what traders call diverging, that's your green light. Momentum is strong, it's time to start looking for a buy. But when those lines start coming back together or converging, well, that's your red light. Momentum is cooling off, you stay away. Simple as that. Now, let's see this in action with a real-world example. On this chart for a stock, PRTG, you see that initial crazy rally that got it on our radar in the first place. Then it kind of goes sideways, right? It consolidates, coiling up like a spring. And right there, see that? That's the MACD crossover. That is the trigger. That is the precise buy signal that tells you the next leg of the squeeze is about to start. So, you're in the trade. Now what? Welcome to phase 3, the play. This part is all about a simple, but honestly pretty ruthless philosophy. And that is, you demand instant resolution. The rule here could not be any simpler. The absolute moment you click buy, you ask yourself one question. Does it break out right now? If the answer is yes, fantastic, you can hold or maybe even add to your position. But if the answer is anything other than a loud, resounding yes, you bail. You get out immediately. There are no exceptions, no hesitation, no second guessing. And that brings us to the final and maybe most critical phase of the whole trade, the exit. Getting in is only half the battle, right? Knowing precisely when to get out and actually take your profit, that's what separates the amateurs from the professionals. So, yeah, the entry signal is crystal clear. It's that MACD crossover. But the exit is just as important. In the heat of the moment, with everything moving so fast, how do you know that the party's over and it is time to cash in your chips? You look for 3 very specific visual warnings on the chart. The first is called a topping tail. That's that long wick at the top of a candle, showing that buyers tried to push it higher but got slammed down by sellers. Second, high volume rejection, basically a big red candle on huge volume. That's a giant red flag that the big money is dumping their shares.
And finally, the MACD negative cross, the exact opposite of our entry signal. You see that? Momentum is officially dead.
So when you see any one of those signals, you act. You don't think, you don't hope, you just get out. Because in momentum trading, the absolute last thing you ever want to do is get caught holding the bag when the music stops.
So we've covered the hunt, the signal, the play, and the exit. That's the whole mechanical system. But none of it works without the final piece that holds it all together, the mindset. You have to remember, you're not just trading math and charts here. You are trading human behavior.
See, the reason this whole strategy works is because it plugs directly into what you might call the market's FOMO engine. It's this predictable cycle. A stock gets a ton of visibility. Retail traders see it and they pile in, driven by that fear of missing out. All this new buying drives the price even higher, which just feeds the cycle. It becomes a self-fulfilling prophecy of hype.
But it's a trap to think that success comes from chasing that hype. It doesn't. Real, lasting success comes from building your own internal positive feedback loop. When you are disciplined and you focus only on the absolute best setups, your accuracy goes way up. Higher accuracy builds genuine confidence in the system. And that confidence allows you to trade with the right size, which is what ultimately leads to consistent profits. So, if we boil it all down, it really comes down to 3 golden rules. Number 1, selection. Hunt for those top gainers with high volume and a low float. Number 2, entry. You have to wait patiently for that perfect MACD crossover signal. And number 3, exit. Demand instant results. If it doesn't break out right away, you bail out.
And that leaves us with just one final question. The playbook is right here. It's clear. The mechanics are simple. But success isn't really about knowing the rules. It's about having the incredible discipline to just wait, sometimes for hours, maybe even for days, for that one single obvious trade. The only real question left is, do you have it?